Global forecasting firm Oxford Economics has said that India will be the worst affected economy among major global economies even after we recover from the virus. Let's do a three-point analysis to understand the post-COVID growth projections. Number 1. Forecast by Oxford Economics. According to the report, the expected output will be 12% below pre-virus levels through 2025. And so the potential growth projections have been revised downward for India to 4.5% over the next 5 years from 6.5% before the virus. That means India's economy will have to deal with the pandemic aftermath in the medium term. Economists note in the report that the stress building on the balance sheet before the virus outbreak will probably worsen. This headwinds such as stressed corporate balance sheet, elevated non-performing assets of banks, the fallout in non-banking financial companies, and labour market weakness will scar further. Number 2. Impact of government's stimulus package. PM Modi government has set a target of making India a $5 trillion economy by 2025. The government has announced a set of measures to support growth, but it may be falling short to boost demand. The report said that an adequate and well-designed fiscal stimulus would halve this impact. Despite having one of the most stringent lockdowns, it says India's direct fiscal response to COVID-19 so far amounts to just 2.5% of GDP. Even the expected increase in fiscal deficit at 7% of GDP from 4.7% last fiscal is unlikely to deliver meaningful boost, the report argues, calling the Indian government's policy implementation track record mixed. Oxford Economics said it expects the private investment will continue to be held back by both macroeconomic and financial factors. Number 3. Technical recession. Oxford Economics maintains a cautious stance on Asia's third largest economy. It is in terms of the timeline and the growth impact reforms could have. The International Monetary Fund predicts GDP will shrink to 10.3% in the year to March 2021. Reserve Bank of India predicted last week that we have entered a historic technical recession after India's economy probably shrank for a second straight quarter. We will watch out for the central bank official data that is due on November 27th. Meanwhile, Moody's had upped India's growth forecast to negative 10.6% from the current fiscal from its earlier estimate of negative 11.5%.